This is the VC PMI early bird update for July 13th, 2018. The gold market is trading last at 1241.6, down about $5. The average price for the day is 1246. The extreme below that mean is 1242 at the buy one level. The buy two level is 1238. The market came down about 5 o'clock this morning and spiked into a new low of 1236.20 on the gold, below the buy two level, and reverted right back up on the close of that bar at 1238.90, activating a buy signal from 1238.90. The target was completed right away by 5:45 at 1242, the first target. The market is trading between the buy one and buy two right now, and we're looking for signals to be activated above 1242, which is the buy one level. The moving averages are crossing, also giving us a bull signal confirmation. The target is the average price of 1246, the first target. Sell one level is 1250, sell two level is 1253. The silver market is trading last at 1578, down 1970. The average price for the day is 1592. The buy one level is 1583. The buy two level is 1568. The market came down to 1570 at about 5 o'clock, almost activating the buy two level of the VC PMI, which has a 95% reversion probability if activated. And in fact, the market reverted right back up, went through the buy one level, and is reverting back down again, trading between the buy one and the buy two level. We're looking for a buy signal on a close about 1583 from the current levels. The first target would be 1592, which is the average. The extreme above that mean is the sell one level of 1608. The sell two level is 1618. We continue to look for buy signals from these levels of buy one and buy two. I also made a point to indicate in the chart the levels that we suggest to trade and the probability factor on these levels. Basically, for you to have an idea in terms of what these levels represent, as far as where you may want to execute these signals, depending on when you start to trade. I emphasize the point very strongly here that the signal is a very flexible, variable changing price momentum indicator that you can actually activate it when you start to trade, whatever that time frame is when you start to trade. You always start from neutral. You watch the market price come down to these levels, and if it activates a buy signal, then you take that signal and you put your stop right below if it's from buy one. In this case, this signal here that was created was actually stopped out from B1 if you want to manage risk very closely and manage the risk on the closing basis using the 15-minute bar. When you're buying into this area of blue, once again, buy 1 and buy 2, you're looking at about a 90–95% probability that the price, even though it may be giving you a weak sell signal here, it would revert back up. Either it's going to come down and activate that B2 level and revert back up here like it did at 5 o'clock on the gold, the silver almost, and activate a buy signal. The sell signals here basically have a 90% probability of a loss. The buy signals here have a 90–95% probability of a reversion occurring back up to the mean, which is in this case 50.92 for the silver. The crude oil market is trading last at 70.77. We are neutral on the crude oil, up about 43. The market is trading right around the average price of 70.27. The extreme below that mean is 69.29, and the low on the 12 was 69.23, and market activated a buy level from the buy 1 level there, or close to that level. The buy 2 level today is 68.25. We're in the demand area in blue when the price trades around the 69.20 area. Right now the market is trading above the mean, and it's neutral to bullish. Let's see what happens here as the price trades through these prices here, but we are looking for basically the price to come down into that level of demand on the weekly, daily, and monthly for the crude oil. The soybean market is trading last at 8.31 1/4, down 18 cents. The average price is 8.48. The buy 1 level is 8.39. The buy 2 level is 8.29. The market has come down and activated a buy signal from the buy 2 level at 8.28. Your stop is 8.29, basically on the close of the day. When you buy in from buy 2, the stop is on the close of the day. When you buy in from B1, you can manage your stop on the close of the 15-minute bar. For conservative traders. For aggressive traders, you can actually use this level in blue to add to your position if you're looking to go into a long-term position. The first target here on the signal is 8.39. The second target would be the average price of 8.48. The wheat market is trading last at 487.50, down up 3 cents. The market is neutral to bullish. The average price is 482. The sell 1 level is 491. The sell 2 level is 498. The buy 1 level of the extreme below the mean is 476. The buy 2 level is 466. We are looking for the price to adjust to the blue levels, buy levels, or buy 1, buy 2, daily, weekly, and monthly to get on the long side. The E-Mini S&P 500 trading last at 27.98 1/4, down at about a 1/4 point. The average price is 27.91. The extreme above that average price is 28.08. The market high here today was 28.07 1/4, very close to the sell 1 level, and for all intents and purposes, it met the criteria, you might say, for activating a signal here.
If you allow yourself a 10% margin of error as a self-directed account, you would allow basically for these types of trades to be activated and executed. The target is the average price of 27.91. Below that, we're looking at the buy one level of 27.81. The buy two level is 27.64. We continue to suggest to sell rallies in the E-Mini S&P into the supply area that you see here in the 2800 to 2818 for the E-Mini S&P. Conclusion. The metals markets continue to test this area of demand in the 1242, 1238 area. The market seems to be aligning itself on the daily, weekly, and monthly harmonic alignment, which is probably one of the strongest combination of signals that you can identify on all the three trends of the market. It's a very powerful alignment, and we suggest to keep an eye on reversions, continue to add to your positions on the levels of buy one, buy two, levels of demand, and look for the possibility that we could see a reversion occurring anytime to the upside. Trading futures, derivatives, financial instruments, and precious metals involve significant risk of loss and is not suitable for everyone. Past performance is not necessarily indicative of future results.